Welcome back to Wake Up With Cheddar, everyone. Stock futures are soaring this morning after Joe Biden was declared a winner of the presidential election on Saturday, and investors predicting that a Biden administration paired with a Republican-controlled Senate would keep pro-business policies on track, notably keeping taxes where they are versus raises. Now, stocks also getting a huge boost this morning from positive coronavirus vaccine news. Pfizer and BioNTech reporting their COVID vaccine is more than 90% effective in preventing a COVID-19 infection based on late-stage trial data. We can take a look at the markets here. The NASDAQ and the S&P 500 are very close to record highs. The Dow surging more than 5% this morning. The S&P 500 up 3.5%. The NASDAQ up fractionally, but the NASDAQ, again, already leading the major indices in its march back toward a record high. Stocks are up across the board, and that's after solid gains for the markets last week. All three major indices having their best weekly performance since April, and the S&P 500 posting its biggest gains in an election week since 1932. There was so much concern that we might not even get an election outcome as immediately as we did, but investors certainly liking that they have some certainty now. So for more markets, I want to bring in our next guest, Konstantinos, Chief Investment Strategist at RiverFront Investment Group. Chris, it's great to see you this morning. A 5% surge on the Dow. I can't even remember the last time that we saw that pre-market. Explain the momentum behind these major indices with the vaccine news this morning and with Biden's presidential win.
Sure, of course, and thanks for having me. Well, first of all, markets love certainty. That's the age-old saw, but frankly, it's true. And almost regardless of the outcome, markets were going to rally a little bit post-election, just simply, once we knew the outcome, and we know the outcome now. And I think if you take a step back from it, it's very possible that Biden in the White House with a with a Republican Senate might be the best case scenario for markets. And you probably heard this before, but I'll just run through it really quickly. The first thing is that yes, the stimulus deal may be smaller, although apparently Biden and McConnell have a little bit of a history of working together. But some of the more ambitious parts of the Biden tax reform plan are probably going to be off the table for the time being. Markets are going to like that. They're going to respond to that because that's going to help corporate earnings. And then the last thing is the foreign policy this country is going to engage in going forward. It's probably going to be a little bit more orthodox, which should help not only the valuation multiple here, but also overseas. So you put that all together, that's a good backdrop for stocks on top of huge amounts of monetary stimulus coming out of the Fed. As for your vaccine comment, absolutely. I mean, this is potentially the best news we've gotten yet, right? The efficacy from this from the Pfizer vaccine looks like pretty good results. Obviously, very preliminary, but it's improving that probability that we get a vaccine in distribution by Q1 of next year, which obviously is a really important thing for the market as well.
Okay, so the volatility, are we out of the woods, Chris? Even though Pfizer is coming forward with this vaccine that's proving to be pretty efficient, we still know that it's not going to get everyone vaccinated immediately in that first quarter of next year. So what's the guidance to investors here? I mean, obviously buyers are rushing in today. Is this momentum that can continue to build in this market?
Well, the tools that RiverFront uses to try to make shorter term, what we call tactical decisions, they're very unemotional and they're based on three rules. It's don't fight the Fed, don't fight the trend, and beware the crowded extremes. And on those first two, we have a solid green flag. So as I just mentioned, the Federal Reserve, unprecedented levels of stimulus going into the system on top of us likely to another fiscal stimulus bill. So that's huge money sloshing around the system. It ends up in assets, including financial assets like stocks. Second rule, don't fight the trend, as you just mentioned, momentum, which some people are afraid of, right? Oh, the stock market's up too much and everyone, sees ghosts from the late 90s or 2008. But the truth is that historically speaking, momentum in stock markets tends to beget more momentum. That's why that rule says you don't want to fight the trend. You want to bet with the crowd most of the time. The last rule is the trickiest one, which is beware the crowded extremes. And I think your question is, underneath the surface, are we at an optimistic extreme today? Is this an optimistic crescendo of good news? And from what we've seen, we have a number of different ways to try to quantify this. The first thing is that looking at net equity asset flows, related or in comparison to bonds, net equity asset flows this year have been relatively modest. And that's been true for the last few years, particularly relative to bonds. On crowd sentiment polls, our last reading was late last week. And on the crowd sentiment readings that we tracked, that was still relatively neutral. So if you have two green flags and a yellow flag, that's still a pretty positive backdrop from which to invest.
So obviously we have some positive vaccine news. Obviously we have more certainty with a Biden presidency, the expectation that he'll be more predictable, that tweets in the middle of the night won't catch traders off guard, causing them to misprice a strategy, then only having to go back and reprice it. We've heard that on our air, that was an issue, right, during the Trump administration, that pricing those tweets, trading on those tweets, had traders on the wrong side of trades at times. But the big question is still fiscal stimulus. And so I'm wondering, at what point do we get another fiscal package? How crucial is that to the market? Because it does seem to be the next most important step to keep this market in its upward trajectory.
Sure. Well, if you take a step back and look at the economic fundamentals, we're still clearly not out of the woods, right? Even with that, the good, quote unquote, good unemployment print of under 7% last week, that's still way higher than the Fed wants it and way higher than we need it to be for our economy to be on track. So it's not a question of if, it's a question of when we get stimulus. I would have said before the election that the likelihood we'd have seen another fiscal stimulus bill in 2020 was relatively low, given the amount of political division we have and the fact that we were in this heated election cycle. I think the probability is incrementally higher now that we get it in 2020. Hopefully, our policymakers can get it together because a lot of Americans out there are hurting and we need it. Nonetheless, I don't think that probability outcome is that you see something in 2020, but we're likely to see something early in 2021, particularly after political dust settles, simply because the economic fundamentals are calling for it. I also think that the Federal Reserve basically has to continue to step into the breach here and to sort of be the buyer of last resort when policymakers allow partisan politics to get in front of or to get in the way of what needs to be done.
Chris, we're starting to see the indices like the Dow and the S&P outperform the NASDAQ. Explain how this is good news for a broad variety of stocks, not just these stay-at-home technology names, which we know actually have wildly benefited from this pandemic, believe it or not. I mean, the NASDAQ up more than 70% from that March 23rd low.
Sure. Well, there's an old adage on Wall Street, and I subscribe to it, which is, it's not just about price action, it's also about breadth in the market. So not just that, you have 5 or 6 stocks dragging averages up, but a more sustainable rally is generally driven by when you have broader participation in markets. And so, I think seeing that value trend that you're talking about, seeing, cyclical, high beta and value stocks starting to outperform, I think that's healthy for the backdrop of the market in general. And that may power the next leg of this rally. At RiverFront, we're still on the fence a little bit because, again, at the end of the day, we still think the economy is fairly dislocated. And we still think that investors are going to want to pay a premium for companies that can grow in a variety of economic scenarios, not just one where they have a massive economic tailwind. So we're still pro-growth here. But I do think, and you're seeing it today, right, with the Dow up a lot more than the S&P and a whole lot more than the NASDAQ. I think the next phase of this rally could be a catch-up phase, and I think that should be good for the themes you're talking about: high beta, cyclical, and value.
All right, Chris, we got to leave it there. Thank you so much for joining me on what could be a record day down here on the floor of the New York Stock Exchange. That's Chris Konstantinos, Chief Investment Strategist at RiverFront Investment Group.